All right, let's dive into the first statement. The first part I want to talk about is the title. So the formatting of these statements is very, very, very important. As you can see, all the statements have a three-part title: company name, statement name, and date. 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 So the first part of the heading is going to be the company name. So lawn care. Then the statement name for this one is the income statement. So for the date for the income statement, statement of retained earnings, and the statement of cash flow is going to be for the period ending May 18th, 2015. As you can see, period ending May 18th, 2015. Period ending May 18th, 2015. The only one that differs is the balance sheet. It's just going to be at May 18th, 2015. So that's very, very important. So always includes the company name, the statement name, and the period of the time covered. So the income statement includes all revenues subtracted by all expenses, which gives us profit before income tax less income tax expense gives us profit. Revenues, once again, is income that we earn. In this case, we only have one revenue account. So over here, we have two separate columns, as you can see. This column is for the subtotal, and this is for the actual total, right? So I'll explain this more as we go on. In order of magnitude and with a subtotal called total revenue, if there is more than one type of revenue, there you go, right? So when they say in order of magnitude, that simply means the largest to the smallest number. That's all that means, right? So in this case, since we only have one revenue account, this goes directly into this column over here, service revenue for $100. Let's just say hypothetically we have service revenue for $100 and then we have rent revenue for $20. 100 plus 20 will give us total revenues, which will go over here as 120. But that's not the case for this specific example. Now we're going to talk about operating expenses. So we know that operating expenses, or just expenses, is costs incurred, consumed, or used up in order to help us earn revenues. So we're going to list all the separate expense accounts, right? Rent expense, advertising expense, gas and oil expense, website expense, in the order of the largest to the smallest. So now we have to calculate the actual total operating expenses. So we're going to do 20 plus 19.78 plus 14.80 plus 9.03 to arrive at 63.61. As you can see, there's an underline over here. Whenever we do a calculation, we put an underline. All of these add together, underline gives us this, correct? And then 100 minus 63.61, underline gives us this. So once again, revenues minus total operating expenses gives us profit before income tax. In this case, we have no income tax expense, but this is always listed separately from operating expenses, as you see in chapter 3, because we have to calculate it based off the profit before income tax. So that's why it's listed separately. In this specific question, there is no income tax expense, so 36.39 minus 0 gives us 36.39. I'm going to end this video off right now, but what I highly suggest that you guys do is this. Have this section open. Like pause right now, and I want you guys to recreate the income statement the exact same way as you guys see it over here. So this is one of the things where you have to keep doing it over and over and over again to actually understand the formatting of it, because the formatting is very important. So pause, redo the statement at least once or twice. The more you do it, the better off you are, because once we actually have a bunch of transactions, or sorry, a bunch of accounts listed, we're gonna have to prepare these statements from scratch. So knowing the formatting is very key.